Hello and welcome to another episode of the Investor Financing Podcast. We have Kyle Jones. He's a key principal of TruePoint Capital. Kyle is responsible for the company's strategic planning, investment decisions, asset management, and overseeing all aspects of the company's financial activities, operations, and investor relations. He's a former D1 baseball player, so that's pretty cool, and resides in Texas. Welcome to this show, Kyle. Thanks for joining us.
That's right. Thanks, Beau. Thanks for having me.
How long have you been in the real estate business? Was this like last year, or you've been doing this for 8 years, 10 years?
Yeah. So really since 2012 is when I initially started getting into it, dipping my toes in, and started small with just buying homes and slowly flipping them. That was my initial strategy. Kept a couple to rent and eventually moved into multifamily. So, started doing syndications and raising capital. I was initially just using my own capital to fund the deals. And as soon as I ran out of that, I knew I needed to raise money in order to do more deals. And so that's what led us to raising capital for larger multifamily apartments, which is still what we do now.
So today are you selling properties in this market? Because it's so, I was just talking to another investor and he had purchased a property in Austin like 2 years ago, and he can retrade it for like almost double the value right now. So the market's super hot. What's your thought process right now? Are you exiting out a little bit early on some of your properties because you can get such high price points right now?
Yeah, I think we definitely are. We are selling 2 as we speak right now, potentially selling a 3rd. And really what we're doing, the strategy is more, not so much taking advantage of the market right now. It's just kind of top grading our properties. So we're long-term holders, and we want to get rid of the deals that are maybe in a little bit tougher area, or that just aren't performing as well. So we're kind of getting rid of the turds and replacing them with properties that we want to hold longer. And so we're definitely being way more selective in terms of buying any value add deals. In fact, at this moment in time, we've kind of taken a pause from buying existing buildings. We do have a lot in the pipeline in terms of ground up construction. So that's where our primary focus is. But, not saying that we wouldn't buy in this market, but we just want to make sure that it's in a really good area, because that's what we saw during COVID. It was the properties that were in better areas that seemed to do better for us anyways in our own portfolio.
So on these development projects you're doing, do you have a kind of a model? Are they 200 unit properties, 100 unit properties? Are they all different?
They're all different. The idea is just buying land that can support at a minimum 200 units, and depending on the market. So, we're looking at a minimum of usually 10 acres. We feel like we can build 200 plus units on, depending on the area. And so, the project that we have now that's almost at certificate of occupancy is 230 units. And then we've got another one that we're getting permits on, should have permits any day, that's 316. And then the ones that we have in the pipeline are going to be, anywhere from 215 to 350.
Wow. So those are pretty big projects. So those are like $40-50 million builds, $30 million builds, somewhere in there.
Yeah, it's bigger than we're the 316 unit that we're breaking ground on here probably at the end of the month, and at the end of April here is $62 million project.
Wow.
So
that's great. That's great. Are you using HUD for that to build those out, or are you just doing kind of a bridge construction loan and then you'll refinance? What's the strategy?
It's a construction loan. So the first, the one that we have that's almost a certificate of occupancy, we ended up having to use a hedge fund, which was, very costly for us. But, we were trying to fund that deal in March of 2020. And if you remember, that's when the world shut down in terms of lending. So very, very tough time to be sourcing, construction financing, but we got it done. And, the cost is gonna, it's definitely beneficial for us to, where our costs are, we got it done. The market has continually to appreciate since then. So, but this next project, it's a bank loan. And so really low interest rate. Even after the rate hike, we were able to hold our rate. And so, it's mid threes on the rate, and it's just a 5-year term, and then it rolls into a long-term loan from there.
Sweet. That's great that you got able to keep the rates, because that's another thing going on right now. We have rates rising, but it seems like there's still low inventory, and there's still demand for purchase of single family assets, and there's still a huge demand for rental properties. There's a shortage everywhere, it seems like. So in the markets you're developing in now, you said Texas and Alabama. Why do you like those markets the best?
Yeah, good question. So we're specifically in the Huntsville, Alabama market, because if you look at Alabama as a whole, it has grown, but a lot of that has been pretty much because of the Huntsville growth and some of the growth that's coming into just some small pockets of Birmingham. Outside of that, like markets like Montgomery and Mobile, they're actually losing population. So, we're specifically in the Huntsville market and have been for 5 years. So we timed it well. What's going on there is a lot of job diversity coming in. You've got jobs from all industries that are just pumping money into the development of these, these industrial sites, these manufacturing sites. You have the Redstone Arsenal there, which is an old Army post, but the FBI has actually come in and made Huntsville their second headquarters, and so they're pumping in quite a bit of money to build out this second headquarters. And then you have Space Force that also just got announced last year and is now officially official. And so, that'll start happening here, or I actually don't know the timing of it, but it was just officially announced that they've got the funding and they're moving forward. And so it's really just comes down to jobs and population growth. And it's fairly easy to do business as a multifamily investor. And so when I say that, it's, really landlord friendly for us. And it does take a little bit longer than some of the other landlord friendly states that we're in. We've owned in Tennessee, Mississippi, and of course, Texas. And so you can generally evict much quicker in those states than you can in Alabama. Alabama still takes 3 to 4 weeks, but it's just a timing thing. It's relatively painless. And just warm weather too. It's a southern state. I live in Houston. I like the warm weather. So, I don't want to be flying up to, Minnesota or Michigan in the dead of winter to check on the properties. So that's just a personal preference. But a lot of the same things that we're seeing in Huntsville, we're obviously seeing in the Texas markets, the job growth, the population growth, and that type of stuff that's coming in, and just fairly easy to do business.
So most of these new developments then are market rate, not affordable type of, or workforce housing. It's more market rate type of deal.
That's right. It's market rate, and it's not high end A class. Like you would see at Urban Core, where you're, what they call a wrap. It is definitely garden style, 3-story walk up, maybe 4-story in some of the markets where there's no parking garage. It's just, you get the parking lot, and you may have some carports or stuff scattered around, and then just maybe a pool and a fitness center in terms of amenities. So it's kind of the affordable play for new construction, if you will, rather than going to the top end of the market.
Okay, that's great. Yeah, because that's where they need the housing, right?
Yeah.
And so how were you on your first ground up deal, this one that you're, sounds like that's the kind of first development deal, and you're right about ready to get certificate of occupancy and start leasing it up. And you went through obviously some differences with having to switch the loan program because of COVID, and then labor shortages and material cost increases. But at the end of the day, I think the upside is that your stabilized value is probably a lot more than you originally anticipated, which is a great thing. Which really kind of, it ended up working out in your favor is the bottom line, right? Like, so it worked out. What was on this development project? How did you, your mindset, because this was a large project. How did you go about putting the team of like architects in place? I mean, that must have just been a little bit more nerve-wracking on a bigger deal like this, where you're going ground up. How did you formulate the plan and execute?
Yeah, so great question, because I really feel like my strongest resource that I have in my tool belt is putting a good team together, especially because I'm not pretending to know everything, and I don't want to be responsible for everything. So delegating and to the right team members has been something that has really helped me personally scale my business. And so that's exactly what we did. The first person that I brought on was a developer friend of mine who had been doing fee-based development, which means basically, companies would hire him to just lead the project, hire the contractors, hire the architects and everything else, and he'd take a fee for doing so. Maybe somebody like a REIT or somebody like that would hire a fee-based developer. So I went to him. I knew him through another buddy of mine here in Houston, and just talked to him about our plans to moving into development and us not having experience. He had been developing all types of high-end commercial, from 40-story buildings to multifamily to $200 million Lexus dealership projects and things like that. So he has seen it all, and have been doing it for quite some time. So leveraging his experience was really key. And then from there, we hired out, we went through an RFP process for a general contractor, went through an RFP process for an architect, and then the same thing for a civil engineer. And so those three key team members are probably the most critical for anybody that's looking at new development, is making sure you have a contractor on board, and an architect, of course, and the civil, because early on it's really the civil and the architect that you're going to be working with. The contractor's just kind of sitting on standby waiting for the drawings to come back, and that way he can take all of the drawings to go bid out to all the subs at that point. And so there's some steps that need to be had, but those are the three key team members that are critical for that.
You're listening to the Investor Financing Podcast. We'll be right back after this break.
Hello, Beau here, host of the Investor Financing Podcast. Are you a lender, real estate professional, or vendor that provides products or services within the real estate investing and business owner space? We are offering a few sponsorship opportunities to get in front of a highly targeted audience. If you're interested, please click the link below for further information. We look forward to talking with you. Thanks. Make it a great day. And what do you think? It seems like you've grown really pretty quickly over the last, getting started in real estate in 2012. So we're 10 years in, and now you're developing 300 plus multifamily developments, or units rather. So you're doing $60 million projects now. If you look back 10 years ago, you probably never thought you would, or maybe you did think you were going to be where you are today. But what do you attribute your success? I mean, what was it? I mean, you played high level baseball, so you'd have to imagine you have a competitive instinct. But what really drives you to get to this level? I mean, is there books or big influencers in your life that have kind of formed you where you're at today?
Yeah, I think it's a few things. I can remember, like, in between games in college, I was watching Flip This House, like the original version with Armando Montalago, the guy out of San Antonio, the loudmouth guy in San Antonio. And so, I've always kind of had an interest into real estate, and it really wasn't until there are a couple things that happened in my life. One of them that was, very near and dear to me was watching my wife go through a sickness that ended ended up at the time, she's okay now, but at the time it was very tough for about a year and a half for us, and just trying to work through and get answers from doctors. And it was just a lot of just uncertainty there. And that was also at a time when we needed her salary while I was working a corporate job as well. And it was in that moment where I realized I need to figure out something else, because I don't want to ever be at the mercy of an employer. I want to be kind of in control of my destiny. And so if my wife, or at the time we just had my daughter, I have 3 kids now, but it was just my daughter. So if anything ever happened to them where I needed to take time off, or even just, things I think about, like my wife, she's an assistant principal now. At the time she was a teacher. So having the summers to just go off and do whatever and take long weekends whenever I wanted, not have to worry about forecast calls with my boss or anything like that. So that was one of, probably I would say, the first big catalyst. And then the second one from that was watching my dad get basically forced into retirement from, a large corporation who I also worked for as well at the time. And, we both sold software. That's what, he did while I was growing up. And so I naturally gravitated to that industry. So watching him try to find a job when he's not ready to fully retire was really eye-opening to me. And frankly, that's what finally pushed my wife over the edge to get, okay, I get it. I get what you're doing. Fully support you. Go ahead. And once I really got her full support and her blessing to do it, it was like I was off to the races. So
yeah, that's awesome. I know a lot of people, that's what they want. A lot of people don't actually ever take action, but do you want to be that 50 something or 60-year-old that gets laid off and you still, because the cost of living is not getting any less expensive. So I think everybody out here at least needs to start with their side hustle, and whether that's real estate or owning some kind of side business is the key. And that's why I like to do these shows and bring on people like yourself who, I'm sure you always were relatively successful after your baseball career in the corporate world, probably did pretty well. But, I think you realized that there was a lot greener pastures out there, and you ended up taking action. So what are your goals, kind of to wrap up this conversation? Is just keep developing. What's the big picture for you?
Yeah, I really don't have this massive unit count that I'm targeting. I think people really need to be careful when they put those types of goals out there. And a lot of people are doing that. And I think it's okay to an extent, but you have to be careful. And what I mean by that is, if you're sitting here saying, I've got a goal of having 10,000 units, for example, in our world, that's how they kind of quantify your experience. So we have, 22 plus 100 units. And so, yeah, 10,000 units sounds really cool, but what you can really find yourself in is a trap of just doing deals to do deals. And that's what I don't want to get into. I'm more interested in creating a long-term lifestyle for me and my family more than anything else. Anybody who gets on here and says, I just like offering my passive investors great returns and passive income, it's like, that is a load of, what. That's not true. We're all in this to make money, right? We all got into this to make money, and that's okay. But money can't be your only driving factor. And so for me, it's little things that I think about and being able to do long-term with my family. So I still think about taking a full summer off. We've traveled more since I've been done with the corporate job, and traveling more with my family. And even during COVID, we were traveling, we were going to the beach and just hanging out and doing all that kind of stuff, and just really trying to maximize the time with my kids. And then at the same time, also really prioritizing time with my wife and growing our relationship, and making sure that, when our kids are old and grown and out of the house, that we still love each other. We want to be around each other. So I'm really trying to nurture being the best husband and father that I can be. And real estate is just a byproduct for me that I can do that with and create the lifestyle I want.
Perfect. That was excellent. I love hearing that, and resonates with me too, because I think a lot of people more into their unit count, and it's really about your lifestyle. That's the important thing. Who cares how many units? It's what is that doing for you and your family and the people you love. So thank you so much. Where can people follow you or get more information about your company? Where would you like to send them?
Yeah, so we have a website, and we send out a weekly newsletter, and they can sign up for it there. It's just www.truepointcap.com. I'm also available on all the social media channels. LinkedIn is probably the one that I seem to use the most, just because that's what we use in the corporate world to generate leads, and I think that's where you might have connected with me. But I'm pretty easy to get a hold of, so if you just look for Kyle Jones on the social media stuff, we can connect, and I'm always willing to jump on a call with somebody too. I mean, so I'm pretty easily accessible.
That's awesome. So I appreciate your time. This was a great conversation. We learned a lot about what you're up to and how you got started and what you're doing now. And it's great to see such terrific growth and exciting projects happening for you. So much success in the next few years and beyond. And everybody who's watching, I hope you enjoyed another episode where we unpack some investing tips, and you can learn from other people that are doing it and, got out of their W-2 job, got into real estate, and over time they were able to create a good lifestyle and living. So please like and subscribe, and we'll see you on the next episode. And thank you, Kyle.
All right. Thanks for having me, Beau.